he does better in the polls when he's taking on China, fighting with China, than actually having a trade deal. Is this, again, about trade, or is this about something else?
Well, yeah, Trump's got to play two opposing forces, basically. He talks tough on trade. His base really responds to that. Talking tough on trade, the market goes south. And if he escalates tariffs further, I think you do have to start thinking about recession. Right now, it's been a headwind to growth. If you put on the next $200 billion in tariffs, I think you've got to start thinking about recession, because that's a big amount of tariffs. You've got higher costs for the U.S. consumer. It effectively removes the tax cuts he's put in place because consumer prices will go up. So a status quo may be his best scenario right now, but an escalation that he says is coming if we don't get the deal, I think that starts to have real economic consequences.
Patrick, when you look at the Fed, do they look at the inverted yield curve? And actually, should they try not to make it invert further?
Well, they look at it. It's one of their measures they look at for predicting recessions. But if you look at all the backward-looking measures, the Fed's going to be very comfortable where we are. Economic growth is strong. Unemployment's 3.6%. Wage growth 3.1%. Five-year forwards on inflation in the U.S. is 2%. So all those things exactly where you want things to be if you're the Fed. If a cut happens, it's for an insurance for things that might go wrong in the future. There are some slowing things that happen right now in manufacturing, definitely. But the backward-looking measures where the Fed probably looks at a bit too much still look good.